One of the first things you should do when you're preparing your company for sale or exit is to make sure you hire the right trusted advisors, if you will, surgeon for your procedure. I think you wouldn't hire a foot doctor to do heart surgery. It's just as simple as that. Mergers and acquisitions is a specific field that lawyers and accountants focus in on and are good with. So a good accountant is going to put you on the right program, and sometimes it could take 6 months to 18 months in order for you to get all your books in order. Your accountant should make sure that your numbers are either at least reviewed, but is always better audited. And audited means GAAP financials, that's generally accepted accounting principles on an accrual basis versus cash basis, and make sure all your financials are in order. And you want monthly financials, not just yearly financials. You should make sure that you at least track all your numbers on a monthly basis. So you have a good accountant, and you want to make sure you have a good lawyer. Typically, you'll get some lawyers who've done private placements or mergers and acquisitions, and they'll sort of design for you a private placement. That's not what I'm talking about. I'm not looking for companies or actually lawyers that will sell you on a private placement. Yes, you might end up doing a private placement, but first work out that deal and then hire the private placement attorney. What I'm talking about is an attorney that's going to go in there, analyze your business, look at all the skeletons in your closet, if you will, look at all the personal things that are going through your business, and clean all of that up. Really professionalize your business such that when a potential seller or investor goes in there, they're not going to find anything that is surprising. They're not going to find anything that's inappropriate in your business. You don't want to deduct unrelated business expenses out of the business that you're preparing to sell. So, okay, you got a good accountant, you got a good lawyer. Now you may want to hire an investment banking firm or an investment broker who's going to look at your business and position your business for sale. And yes, they may get the highest price for your business, but you may want to go to them because they have some expertise in positioning your business such that it is sellable, it is investable, and they could be a good complement to your accountant and lawyer. However, you may want to go directly, or you may already have a private equity firm or financial investor or strategic investor that's already looking at your business. And you don't necessarily need an investment banker to do an auction process for you. You just may want to have the investment banker represent you instead of having an auction process. An auction process is basically hiring an investment banking firm that's going to send it out to hundreds upon hundreds of potential buyers for your business. And that may not be what you're looking for. You may only want to be talking to one or two firms at the end of the day. And so if you're comfortable with a private equity firm or a financial partner that has either approached you or approached them, continue to work with them. You'll be able to, if the valuation isn't there, you'll be able to negotiate either a higher price or a price that is in line with market. At the end of the day, your business is what somebody pays for it, and that's the value of the business. So those are the things to help you prepare your company for sale. Usually what businesses have on their business, and they run cash in and cash out. It doesn't matter exactly when the cash comes in, goes out, but that doesn't necessarily mean that the money is earned. Accrual accounting it recognizes revenue when either money is earned, recognizes expenses when money needs to be paid. And that's really the biggest difference. So one example is the deliverable on the product is in August, and you receive that money in December of the previous year. So if on a cash basis, you receive that money in December of the previous year. On a revenue basis, you actually receive that money or could only recognize that revenue of August the next year. So that would obviously affect the amount of taxes you pay on the previous year. If you're on a cash basis, if you're on an accrual basis from a tax perspective, then you need to recognize the revenue in the next year.